Check. I don't, are you able to see it? It don't even matter. Yeah, get a pencil. All right, today we are going to be going over the basics of stock options trading. We're going to be talking about puts and calls. What the heck is a put and call? If that's not a good pencil, let me know. I have some of my students that's going to be listening in, taking notes, and getting their first dabble into the stock market in general. So I hope you enjoy. If you've never heard of stock options trading, it's just the same thing as the stock market itself. And all it is just a derivative of the equity, which we all know as stocks. All right, so what I actually have on the board is the Thinkorswim platform. It's by Charles Schwab. It actually started out as Thinkorswim, then it got bought out by TD Ameritrade, then TD Ameritrade got bought out by Charles Schwab, and here we are. Now with this platform, I used to be a broker on the trade desk, on the options trade desk for 2.5 years, and then I became a teacher, as you see the room that we are in right now. But the hours are better, if you're wondering. Like, why would he quit doing that? It's awesome. I love teaching, and so here we are. All right, so what we have right here is the chart for Tesla. This is a daily chart. The way to look at this is that these things are called candlesticks. So everything you see here, I don't know how I'm going to touch this, but yeah. I'm going to zoom in a little bit so maybe it gets a little better view. These are all little candlesticks. They are called candlesticks because they kind of look like candlesticks. They have a body, and then if you see closely enough, there is a wick on either end. All that just is meaning that price action happens. So during that day of trading, between the top of the wick and the bottom of the wick, those are the highs and lows. And then the in-between is where it opened and closed. It's not that big of a deal, but something that you will need to know, especially when going forward. Okay. So what would I want you to know from the very, very beginning? Well, first off, what the heck is a stock? Does anybody actually know? Good. Stock is ownership in a company. That's all it is. When you buy a share of a stock, you own one piece of this company. So if you owned a share of Tesla.
Students and staff, please excuse the interruption.
Excusing the interruption.
For the young men that assisted Dr. Berry and Ms. Branson.
You keep helping Dr. Berry and Ms. Branson.
Please meet Ms. Branson in the assembly room. Again, for the gentlemen that assisted Dr. Berry and Ms. Branson on Tuesday, please meet Ms. Branson in the assembly room. Thank you.
All right, sorry for that interruption. So stock is just a piece of ownership in a company. We also call it equity. So anytime you hear equity, just note that just means ownership. Nothing more, nothing less. Ownership. If you own one share of stock in Tesla, you don't own much. It's only $400.13 worth of it. This is a $2 trillion company, and that's how they get that number. So a share is $413. You could tell how many shares are out there by the value of the actual company itself. Let's go and find that out, actually. Let's do a real quick Google search. Market cap Tesla. $1.3 trillion. So you divide that by 413 and you'll get how many shares are out there. I'm not going to do that math by any means. There's no way I can do a couple trillion in my head right now. But that's the idea. So the more share that you own, the closer you get higher of that evaluation of that company. So if you owned $1 billion, you would literally own 1%. It would take a lot of shares to own 1 billion of this company. And that would only be 1% ownership. So that's kind of a crazy number if you really start thinking about it. So why did this come about is because companies, they want to have a way to get capital quickly. So the quickest way after you become an established company that has a lot of revenue, or maybe not so much revenue, but basically you make money. The concept is that you're making money, is that you offer up ownership of your company to the open market. And what they will do when this thing called an IPO happens, it's initial public offering, is it gives a chance for anybody in the United States of America to invest into your company. And that investment is in shares. And now you or whomever at that offering time has ownership in the company. And you're hoping that as you buy and purchase more of this company, that the stock price goes up. That would be the best scenario, right? Obviously. If you were a owner of Amazon, I want to show you this. This is kind of a crazy one. Amazon is one of my favorite ones to take a look at from a very large point of view. So let's just look at this from a day or a 1 year perspective. 1 year ago, the lowest point at Amazon was 149, let's say 150. 1 year ago. And it's currently trading at $222 now. So it's up $70 of 150 in a year. That's a 50% gain in 1 year. If you were owner of those shares, you would have 50% more dollars as long as you still hold those shares of equity. You gain 50%. So that's a 50% return on investment, if you ever heard those words. And that's just 1 year. That's just 1 year of Amazon, one of the largest companies in the world. And I'll give you another, wrap this up in your head for a little bit. Amazon is a $2.3 trillion company. That means they gained $700 billion of value in a year. It's a wild number. It's a wild number to really grab. They almost made over half of $1 trillion worth of value in a year. Let's keep thinking now. Now, this is only 1 year. My gosh, we can go back much further. Let's look at, let's say 10 years ago, and at a time frame, 10 years ago, and we'll look at it from a monthly perspective. All right, each of these candlesticks represent 1 month of trading. So this is a month, 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 but over the past 10 years. Now they've done some stock splits in between. So this number seems really, really small, but it was probably a little bit larger when it was actually there. So back in, what date is this? When it was $17.50. So February of 2015. February 2015, 10 years ago, this stock was trading at $17.50. It is now at it hit a high of 233. It's currently trading at 222. It has 10x'd, so 15 times this money in 10 years. So if you put, say, $100 in, you would now have $1,500 in 10 years, never doing anything. No, it'd be more than that. It'd be like $2,000. 15x to $100, right? All right, what's 1,000? Math is mathing. Put $1,000 in, you'd have $15,000 doing nothing. This is the power of the stock market. This is why people do it, because they're not working for it. The company is working for it. You have ownership, so you have that value, and that whenever it gets to a certain point, you can close that position and sell your ownership to somebody else and take your value out and get it in cash. What's another one? It's kind of crazy. NVIDIA. Does anybody know what NVIDIA? Go ahead.
I got a question. So
Ooh.
just said you can, after you, if you can, so basically you just said you can trade that chart to someone else?
You would trade your position to somebody else. So if you had it, let's say you bought it, I'm looking at NVIDIA now. This thing has gone crazy just over the past like 3 years. We have done that same 17x and that Amazon did over a 20 or 10 year, over 3 years. And NVIDIA is wild. This one's a crazy chart. So they've done some stock splits as well. So this number is kind of low compared to where it really started. Probably really started like maybe like $15 a share. But after stock splits happen, it lowers the value, but you just gain more shares. It's okay. So anyways, let's say worst case scenario, you bought in 2 years ago and it was trading at like $15 a share. Is 10x'd itself in 2 years. And I think at one point it was the largest company at one point this year, or last year, excuse me, 2024. Yeah, $3.3 trillion company. Does anybody know why? Why is NVIDIA one of the largest companies in the world right now? Like probably number 3. Graphics cards, which do what? It's the one main thing that everybody talks about right now, and this class is actually supposed to be. AI. That's how this happened. They make the graphics cards that allow AI to happen. And so they're being thrown money. And when you are being thrown money and you make cards that can handle that type of work, that's what you get. 2 years, blown up, huge. Largest company, it was the largest company in the world for a moment. I don't think it is right now. Maybe it's Apple. But it's up there in top 3, which is kind of crazy. NVIDIA was never even thought of, and then boom. Apple, yeah. So Apple's at a 3.4 trillion, so it's probably number 2. Barely.
What's number 1?
Apple. Right now, yeah. Maybe Microsoft. Let's check Microsoft real quick. Because they were close as well. They're all up there. 1, 2, and 3. They're all on the, 3.18. So Microsoft is actually not as big of a company as NVIDIA is. It is kind of crazy. Now, Microsoft's been around a lot longer. A lot longer. Okay, and so if you don't understand like the basics of the market itself and what a company is, it's really hard to kind of trade it. And people are just kind of giving you, hey, buy this, buy that, or sell this and sell that. That is the absolute worst way to learn how to trade in the beginning, is by just somebody giving you a hot tip or whatever. Because what happens when that person leaves? Then you have no clue what to do. You just have something you don't even know why you have it. Yeah, exactly. So I highly recommend that you just learn how to do it and then take the hot tips. Right? Like, instead of learning basketball from LeBron James and you don't know anything about it, he might be able to tell you when to shoot, but that doesn't really help you. Because then you're in a game time situation, he's not there to tell you again. So that's the concept of this stock trading. Okay, hey, let's learn why he said shoot then. Let's learn why he told you to make that crossover at that moment. Like, what makes that happen? What situation causes the effect of doing or making a choice of either buying to go long or selling to go short? So let's go back to, it's like Apple. It's a pretty smooth chart. All right, so this is really simple. This is really simple. If you're looking at a graph, X and Y, left to right, this is the beginning, this is the end. If you would say, if you're just looking at this, what type of trend is Apple in? Is it an uptrend or is it a downtrend? Why? Just kind of looking at it. You're right. Why isn't it uptrend? Simple as it is. Simple as that.
I mean, we just
Because it's kind of going up. Yeah, all stocks go up. It's kind of the concept. Kind of the concept. It's an American thing. All stocks just kind of keep going up until they don't. Like COVID. They plummeted like 20, 30%. And then guess what? Oh, man, skyrocket. Right back up. It was wild. We started pumping money into the market, and you guys got to be out of school for a year and a half. And, right? Year and a half? Was it a year and a half? Greatest teaching days of my life. Okay, so we're in an uptrend. The best thing to do during an uptrend is to do something that is established with it. It's the easiest way of trading, is to find out when to buy again as it's going up. Because there is, as you see, these things called dips. And it always happens. Nothing goes up forever. It has like a staircase effect. When you're walking, yeah, you step, but your foot still has to come back down to move forward. That's kind of the same concept. So you're riding that market up and down, and you're going to try to buy when your foot hits the ground, and that next leap up is when you want to sell if you can. It's the hardest thing in trading is making that imaginary, when do I close this position? So if I just so happened to buy the very bottom of this candle, if I was just an absolute god of trading and I bought the absolute bottom, what makes me note where to make a sell so I can get out of this position in a profitable sense? And you're like, I don't know. Neither does anybody else. That's the beauty of this. Neither does anybody else. But what they're doing is making an educated guess. If we know, or we have this idea that, hey, generally speaking, it's going to continue to go up. The best place to sell is probably the highest point of the last place, or close to. And that would almost be the general consensus of every time. It went a dip, it came back up, and it kind of tested that height, as you see, until it broke out. And when it broke out, okay, now we're finding new highs. These have never been tested. Usually, on times that have never been tested, the stock market rips real hard, or Apple will go up real high. So before this ever happened, let's say at a time before there was we didn't know what was going on over here. This is a new year. This is the future. As we start going and making new highs, it tends to continue to make new highs until it doesn't. And that's when that one big drop happens the next day. And so whenever that happened, everybody was crapping themselves. Like, oh my gosh, it broke out of that normal trend that we were having. Which typically, for people that are real big buyers, that are those investors that put their money away in their 401ks or whatever that is, that's where they buy. They want the big drops. They love COVID. Have you ever anybody heard of Warren Buffett? Great investors, big names. What they're doing is they're holding whenever people are like buying. Oh my God, I'm buying it because it's hot. Like the PS5, for instance. Just go back to COVID times. I don't know if you guys remember this. PS5s were selling for $1,400 on eBay in Facebook Marketplace. People are really buying PS5s for $1,500. Guess who wasn't doing that? The investors, right? Because they're not, you got to think about that. Really think about that. No way. If I know when they're going to re-release another dump of them, they're going to be selling for like $300, $400. So guess what you do? You wait till you get it for $200, $300, and then turn around, sell it to the high. Who's ever going to take that next one? Next one's come out, boom, still jacked up, $1,000. People are still buying them, crazy prices, because they had to have them. And that's like kind of the same concept here. When people are fearful, that's your best time. When it feels like the world's ending, which has happened several times in America, and we just keep going. So when everybody is fearful, that is almost always the best time to buy. And I forget what happened in August. This was a Monday. I forget what event happened there, but the whole market went way down. Volatility shot up. It was crazy. Now, let me zoom this back out. So you see this uptrend. Let me find one that is not uptrending so you can see the opposite. That's TR. Nope, that's uptrend. Alibaba. Can you tell what trend that one's in? A little harder, I'm sure. I mean, it's kind of up. I mean, from the bottom to top, it's a linear line that's kind of going up and to the right. But man, like, what is this? This is hard. This is very difficult to trade because there's no pattern. It's like up, down, up, down, up, down. Oh my, up. Oh no, I'm back down again. This is where traders get killed. This is where you lose your money. It's called a casino. Like, yeah, if you just so happen to be here when that happened, you're an absolute genius. And everybody thinks you're a genius. But then, if you were the one who bought into the, oh my gosh, look at him, he's so good. I'm going to get in now because he's so good. I bought in now because I've seen everybody making all this money. Oh my gosh, I'm doing it. I'm going to make money just like they do. And this is how people lose. They get in during the hype. They're putting that $1,500 into the PS5 just for it to come back down and be sold in Walmart again for $400. So that was a good example. I want to find one that's a short. What's phases? This is phase, right? Oh, did they already go bankrupt? Wow. I didn't know that. I thought they were still a company. I just thought they were, darn. Well, they didn't last long either. That can't be it. Where's the... They sure did go bankrupt. So FaZe did go public. But it literally made it for like 4 days and it just sold off. Everybody got excited about them and they could never make money. And then they got bought out. I know they got bought out, but I didn't know it was way back then. I didn't know they only lasted 2 months. But anyways, that's whenever, I don't know if you notice it even on YouTube and on Twitch, when they started like dropping a whole bunch of content creators, when FaZe is like, okay, we can't have all these people no more. They started firing everybody because this is a company. People came in and bought this. Like big corporations came in and was like, hey, we see value in this thing. We're going to put the people in position that can hire and fire. And so they started kicking off content creators that weren't making money. Because we want to make money. If we own this company, I want to make money. I'm not going to buy 20% of a couple $1 billion company, put my $25 million in the fire. No, I'm going to try to make this thing work. Dang. I was really hoping you'd see this a little better, but let's do like a 1 hour maybe. Because man, it was so funny to just watch this thing. It just never came back up. It just kept on slowly going down. Snapchat maybe? What's Snapchat look like? Kind of up and to the right. Well, these aren't really good. I can't show you good examples of a company that you could just go short on over and over and over again. But I thought Alibaba was going to be a good one. Because there was a certain time when it was just, oh, there we go. Over the past 3 years of Snapchat, if you were an owner of this, would you be excited? 3 years ago, I bought it at $10. It is currently now trading at $11.36. Hey, at least you're not bankrupt, right? You have made 10% over 3 years. Yo, you- what? So that's almost one of those. You look like, man, just straight sideways. That would suck. That would really suck if you were an investor in that. It would be really hard to trade as well because it's not moving. It's not even volatile. It goes up and it dies. Goes up, dies. It's just going sideways. Huh?
I would have gave it, but some investors, they don't do it ever since.
Somebody, there's somebody. There's somebody that believes in this thing. Somebody does. I don't think TikTok is it's owned by another company, ByteDance. I don't know if we have it as a listing on the New York Stock Exchange. Byte. I don't know. Let me look. I don't know if it's publicly traded over here. ByteDance stock ticker. Yeah, it's not publicly traded. It's not on the American market. Well, that's the whole concept, actually. There's no U.S. ownership of it whatsoever. And so that's why they're trying to say, hey, if you're just going to share our information to China, because in China they have like big rules that regulate their businesses there, where if China decides as a government to take their information, like who's talking, who's the owner of this account, where's their address, where are they located, what did they say, what have they been saying, what information is in there that we have found out about them, we gain access guaranteed no matter what. If the Chinese government wants it, they can just take it. That's the risk of doing business in that type of governance kind of thing. And it happens here too, so don't act like it's not happens here in America. Trust me, FBI, CIA, it's all rigged. Don't trip. It's already a thing. They know you. Trust me, they can find you quickly if they wanted it. Alrighty. Okay, cool. So we know that the stocks itself is just equity, it's ownership. This number just is a value of each share. The normal share size is going to be whenever you buy in hundreds. That's a typical share purchase, but you can still buy it one share at a time. You used to not be able to do that back in like the 70s. You had to buy 100 at a time. That was the normal lot. It was like, hey, if you can't come into Sam's Club and just buy one package of cookies. You got to buy the whole freaking pallet. Like, yeah, you can't. That was what they used to do back here when the stock market was a baby kind of thing. But now we can buy one share at a time. It's technologically advanced and we can handle one share. All right. Now, for my favorite part, I want to talk about options a little bit as well before we wrap this bad boy up. Because I really went on and on. Okay, options is what we call a derivative of these equities. What's a derivative, Mr. Shear? Good question. Well, derivative just means it's something that is derived from another thing. So I have value based on somebody else's value. I'm a derivative. LeBron James Jr. has value derived from LeBron James Sr. He's a derivative in this case. That's a horrible, YouTube's going to eat me up. All right. He has his own value, of course. He's a good player, whatever. Is he as good as his dad? No. I mean, you can't. Michael Jordan's kid, is he as good as his dad? No. Come on. It's all the same. This is the same concept. But he gets a lot more power because he is from there. Yeah. There we go. So you have power. Options are the power based on the price of the stock. So what is an option? Again, there's two different types of options. And they are called, without trying to use that word too much, it's two different types of options. They are named calls and puts. A lot of people think this is so difficult. It's not. Calls is whenever you make a bet that the stock is going to go up. Puts is when you make a bet that the stock price is going to go down. Now, unlike a equity, you can buy it and it's just the value that it is all the time. It has no expiration date. Well, equity has an expiration date of, hey, if this company gets sold, boom, stocks are at the price that they are. But with options, the whole concept around options is that they have a time value. Every week, options are created, calls and puts are created for that equity or an index, but I'm not going to go there. We're not going to talk about that. Just keep it simple. Calls and puts are created every month, all the way out for almost 2 years. So they have a time value of a certain, depending on how far out they are. Now, this is going to be a time value based on 100 shares. This is where everybody gets the hardest thing to understand is that each option is a derivative of if you bought the shares 100 lot at this specific price. So we're going to look at Amazon here. We're going to look at for tomorrow's options. These are going to be a little bit lower price. Let me make that big so maybe you can see it a little better. Display, look and feel. Very large. Shee. Can you see this? Okay. So right here, as you see, this is the call side and this is the put side. We have this thing in the middle, which is called a strike price, which just means where you're betting for this price. This is now, I hate using the word bet, but it's the best way to understand it because then people understand gambling. It's not a gamble if you do it the right way. You are betting on the call or the put, depending on the price that you think it's going to be at that date. So for this one, this week's ending options are for Friday, every Friday, same thing. So we have 1 day left. We are betting that if you wanted to buy the stock price that's right at the money, which is we call, hey, this is the closest option to the price of the stock right now. I am betting, and I would have to spend $57 to bet that as a put, we're expecting to go down, that the stock price will go below 220 by expiration of tomorrow. If I did it on the other side, I'm betting it's going to be above 220. I would have to spend $300 to bet that it will stay above this 220 price by tomorrow, end of day tomorrow. Yes, go for it.
So if you're incorrect, like with the call,
You lose $300, yeah.
oh,
Yeah. So this price, whenever you buy an option, and you'll see that these are going to kind of move as the stock market moves.
The stock market never stops moving. Right?
No, it does have an end. So the beginning of the day is at 8:30 Central Time, and then 3 o'clock Central Time. So Eastern Time, 4 o'clock, 9:30. So that's the open and close. Futures market, that continues sort of forever. But the stock market opens and closes 8:30 a.m. Central Time, 3 o'clock p.m. Central Time. These actually haven't moved much. I guess Amazon's not really doing anything right now. It's just kind of sitting there at 222. But what this is doing is saying, hey, I want to make sure that bet works. So if it does go lower, let's say, and we can do it by the prices here. if it were to go down $2.50, my option that I bought for $56, if it goes down $2 from right now, if it were to go down $2, it would be worth $1 or $144. And I would make $100 off my $50 bet. You hearing that? Seeing that kind of? So I'm betting it's going to go lower. I'm paying $57 to see that happen. If I go down $2 right now, it would be worth $1.48. And I would made 200%. Options is the quickest way to leverage your money because as you've even seen, Amazon, it went up 15x over 10 years. Well, we just 2x'd in a couple days, or maybe 24 hours. That's the power of options. It's called a leverage. It's a derivative that leverages the stock market. So you're only having to put in a little piece to control a whole bunch, but it's harder. Remember we talked about, hey, we're watching this thing, it just does this. And we don't know where it's really going to go, but we're trying to make an educated guess on where it could go. Same thing on this side. I'm even putting up a little bit more money here because the puts are a little bit cheaper. But on the call side, if I want to make a bet to get higher for this stock to go up, if I think Amazon's going to go up, I would have to pay $300 to even get into the trade in the first place. But if it goes up $2, I'm now at $520. So I made $220, which is not even double, but it's about 80%. So I made 80% in less than 24 hours. That is the power of options. That's why I love options. Oh, poop. So let's get some questions. Oh, I know. I just fire hydrant. I want to give you a time or a chance to ask a question. Any question. Calls, puts, strikes. Strikes are probably one of the hardest things to remember but it's just the bet wherever you are or wherever you think the stock's going to go. These right here, that's the exchange that those are being traded on. So this is the BAT exchange. This is the X, the CBOE. I don't know them all. Yeah, but there's this exchange that's traded. Doesn't mean a thing. It doesn't. Yeah, man. Nah. The most important thing is this bid and ask thing here. I'm just going to keep it simple and just say the round number but this is where people are willing to buy. This is where people are willing to sell. So if I wanted to sell it to somebody, they could buy it for $3 right now. If I wanted to sell it, they would be willing to buy. If I wanted to buy, they'd be willing to sell. But the easiest way to remember, somewhere in between those two numbers is the real price. There's somebody willing to buy at 288, somebody's willing to sell at 296. We'll try to come to an agreement. It's like 5 cents difference. It's not like a crazy big number. I know it's a lot. Anything. We go back to the stock part, or we can talk more about the options. What do you got? Go for it.
Go for what?
Oh, I thought you had something. What were you thinking? What did you write down?
What did you write down?
Oh, I didn't say to. He just wanted to. Yeah, we just keep doing it. Keep hammering it in. Yeah, it's cool. You do?
Just listen.
I asked my question.
I'm just. I'm trying to take all the knowledge.
Yeah, it's a lot. It was a lot. Try to keep it simple. A stock is a stock. It's equity.
So do you
It's ownership.
own stocks?
Do I own stocks? In the IRA, yeah. I prefer to trade though.
So
So this job, I put money into their IRA, and then they.
Can you elaborate what you like trading? How do you?
Oh, what's the difference between trading and investing? Oh, cool. Trading and investing. Trading is active. Investing is passive. I buy Amazon. If I buy 100 shares of Amazon, I just let it sit for 100 years. I didn't do anything, but it's probably going to make some money. It's called passive. I didn't do anything. Trading is active. I'm having to decide more buys and sells. I'm having to actively look at the market every single day. Is it up? Should I sell now? Is it down? Should I buy more? Seeing what happens. That's right.
Based off the company, and trading is you selling or buying.
Buying and selling during the day or during the week or the month or whatever. Yeah. Yep. Investing is good for that real long. Like, hey, I think Apple's the best thing ever. Even if it is the largest company in the world, I still think it can even double in the next 5 years. You should probably put your money in it. And it's a great company. It's not going nowhere. It's not like it's going to fail 50% off. I highly doubt that. Highly doubt that. Now, NVIDIA, that might be a little bit risky of a bet right now. It's already up 2,000% in 2 years. It's kind of crazy. It's kind of crazy. It might be a little bit risky, but hey, AI might be the future forever. And if AI is the future forever, it's going to continue to really go up. If you thought it was a high price now, the value is going to really shoot up later on when AI is the only thing we use. Because Apple, before we had an iPhone, that was cool and all. But until everybody started using cell phones like that or smartphones, it was kind of, Apple was pretty much nothing. And then when everybody adopted that smartphone philosophy, everybody owns it. Huh? Oh, that's okay. Nah, yeah, just let her ring.
are you sure?
Yeah, I'm in class. I'll call her back. That was a good question, though. Difference between trading and investing. A lot of people don't know that. That was a great one. Cool? We good? All right, good class. Well done. Well done.
2 years.
Heck yeah. Hit that like and subscribe. Appreciate it.
This is your little microphone.